In this video, I'm going to teach you my personal crypto model. This is the best crypto trading model you can use in 2025. This works incredibly well and it can easily become your bread and butter setup. All I ask in return is a simple subscribe, because I'm giving away all this information for free. And some people literally charge thousands of dollars for it. So let's get into the good stuff. For crypto, we are only trading above the 15-minute time frame, alright? If you go below that, this strategy doesn't work and eventually you will blow up your account. So 15-minute time frame and above only. Now the model I'm about to teach you is called range trading. It's one of the cleanest and most reliable ways to trade crypto. And when you backtest and forward test this, you're going to come back and thank me. Step 1 is to understand the range. What we are looking for is a push into one direction, either a strong move up or down. For example here, let's say price pushes up. We get a big move to the upside. After that, we will see a significant high and a significant low form. So after the push, we mark the high and that becomes our range high. Then after price pulls back, we look for that significant low to form. And now how do you know if a low is significant? If the low gets violated right away, it doesn't count. If price forms a low and it holds, meaning it doesn't break immediately, and we get a strong reaction upward, that's your significant low. And that's also your range low. So now we have our range high and our range low marked out. Simple. Step 2, deviation. Now there is something called deviation in crypto, also known as a liquidity sweep. They are very similar, but there are a few details to pay attention to when identifying them. So once our range is formed, we wait for price to either sweep the range high or the range low. Let's assume right here price sweeps the range high. Now we have 3 steps, or basically rules, for taking our trade. And that's basically step 3, the 3-step entry setup. Step 1 is acceptance back into the range. After the sweep or deviation, price must close back inside the range, and you don't want to enter until it does. Step 2 is the market structure shift. The small low that formed before the sweep, that's your reference point. For a valid structure shift, that low must be broken. And once price closes below it, we confirm the shift. And step 3 is basically mark out your entry zone. At this point, you can mark out your entry zone using fair value gap, breaker blocks or order blocks, whichever you prefer to use for entries. You will often see your setup align perfectly with one of these. Now mark your range high and range low using the Fibonacci tool. And note that the 0.5 level, the midpoint, is your range mid. When price reaches that 0.5 level, move your stop to break even. And also take 25% of your position. And this part is crucial. From there, target the opposite side liquidity, in this case the range low. And that's literally all you need to trade this model. I'm not even kidding. It's extremely powerful and very profitable when used correctly. Now, if we flip the chart, the same logic applies in reverse. Let's say we're in a downtrend and price dumps. We form our range low, then a significant high, and that high becomes our range high because it held the market down for a while. When price sweeps the range low, we wait for it to come back into the range, and we then look for a market structure shift, mark out our entry from the fair value gap or the order block, and target the opposite side, the range high. One important rule is don't take the trade if the market structure shift happens outside of the range. It must come back into the range first to be valid. For my testing, I do recommend skipping Sundays and Mondays. The markets are usually slow and choppy during those days. If you want to be extra cautious, skip Saturday too. That's basically the full model. And now let's go through a few examples so you can see how it looks in real time.
So right now, I just want to show you like 3 live examples from 3 different crypto coins. So let's start things off with Bitcoin. If you look at this right here, we can start with identifying our range high. That's this right here. And then we identify our range low. Now we are on the 4-hour chart. We can see the range high got swept and closed back into the range. Change of structure. So we could right here go for a short position where we target the range low, stop loss above range high, the swept range high, and then we can see how does this play out. you see, we have touched the range low. And here you want to take profit. And again, in the mid-range, you can take off like a partial. So right here, you can take like 25%. It's also called the mid-range. And here you want to take 100% of your profits or let it run a little bit. But you want to keep it technical, just take 100% of your profits at the range low. Now let's go to another chart, Solana. So what do we see here? We see again, we have made a range high right here. Then we make our range low right here. And you also see this range kind of respects these levels too. What is good? We again get a sweep outside the range and we close back in. So here you want to entry. Then we want to target, of course, a long position. So right here, stop loss below the sweep and target the range high. And of course, we can use Fibonacci again to take 25% of our profits right here at the mid-range. Now let's see how this plays out. And there we go, 25%. Now let's see if we can go to the upper range, and we made a beautiful move to the upper range where we can take 100% of our profits. Now I have one more example for you guys on one more pair, Hemi. This is a trade I actually took, so let me show you what I did. Alright, so if we look at the 4-hour time frame, again, we can identify our range high and we can identify our range low. I also want to show you something on the 15-minute time frame right here. It might seem like this is your range high, but it doesn't match up with the higher time frames. Like you see, this is obviously your range high. On a 50-minute time frame, we can keep an eye to see, hey, does it close back into the range and does it give us opportunity to trade this? And here you see it closed back into the range. No sweep yet. Change of structure. And then we make a good low. So what do we want to do here? We're gonna target the long position again. This will be our entry. Stop loss below the lows. And target the range high. Risk to reward ratio of almost 6. Now let's see how it plays out. And boom, we again swept the range high, can take full profits right here. Again, you can use Fibonacci to take 25% of your profits right here at the mid-range, 0.5 level. Trading the range is so super powerful, and I recommend everyone stay with one strategy. If you're a beginner, preferably one pair, and just do this strategy so many times that you get so good at it.